Morning. Crazy night. All this Iran speak. We'll give folks an opportunity to join here and dive into it. Talk about something of lesser consequence here at 7:15. I think that data drops. As you might imagine, in a holiday week, MBA apps were down last week. Refi apps were down pretty good. We look at really no data here today, by the way. For the most part, the headline of the day is 2 o'clock, Fed minute reveal. So, that's going to really be the highlight of the day. And it's going to be interesting to see, just how hawkish in reality that meeting was. As we've talked about, I think that the consensus coming out of that meeting was that it was a bit more hawkish than I think it was intended to be. I think that, similarly to how sometimes folks mistake honesty for, being nasty or being rude, I think the Fed was trying to be pragmatic, more so than hawkish. So it remains to be seen. Got to keep an eye on 2 o'clock. Kind of the news of the day, though, is the potential end of, I don't even know what you call it. We were still in a memorandum of understanding, truce, ceasefire, but whatever it was, and I'm paraphrasing, I don't have the quote up in front of me, but the president, basically said, I'm not going to deal with those people anymore. They're bad people and so on. He kind of walked that back a little bit by saying, the negotiators want to negotiate. They're good people. So, this, I feel like a broken record when I say this. And I think, similarly to how things can be misunderstood and, for better or for worse, this president is certainly incredibly misunderstood. Sales 101 is to take it off the table, right? And then give it back. So I still always revert to, the man wrote a book called The Art of the Deal, right? He's a salesman. When he says some of these crazy things, it's the best thing you've ever seen in your entire life. Nobody's ever seen it better. That's the salesman talking, right? And I hate to say, in a lot of ways, sometimes not a very good one, ironically. I think that, when he does sell, he sells from strength. And so when you sell from strength, which is a lesson to be learned all in and of itself, because I think that's really, in a lot of ways, the only way to sell. But when you sell from strength, you can kind of say whatever you want sometimes and still win. But, long story short is the idea that, he's going to take a truce off the table, but then open a window and potentially even more artfully, right? Kind of deflect that onto somebody else to reserve the right. This is good cop, bad cop, right? I'd be shocked if that's not the strategy here, and why he said what he said was, I think it's a matter of good cop, bad cop. But anyway, as you might imagine, good cop, bad cop, middle cop, no cop, nobody likes it. So what do we got? By and large, all stocks worse overnight. Hang Seng wasn't, though, the outlier. We're indicating worse here onshore, about a point. VIX is up almost 10%, Bitcoin down, and generally speaking, commodities down, and in some cases down pretty big across the board, except, guess what? Brent and crude. Crude back above 70, 74 and change. Brent approaching an 80 handle, 78 and change, both up about 5-6% after being up yesterday. So bonds, and for that matter, the market at large, does not like that. Listen, we talked about it yesterday, right? We were basically full on lock. I hope you listened to me. We didn't have an outstanding lock day, so I don't know that you did listen, but nonetheless, maybe that was just us. I don't know. But when you look at the stack, we are sort of back in precarious territory for some of these coupons. You look at a 30-day chart, we're near the bottom on 4.5s. 5, we're basically at the bottom on a 30-day. And we're at some major support on a 3-month. Sixes are being sixes right now. And as I mentioned, sixes are the new 6.5s. We're kind of holding up. I mean, make no mistake, well off the best levels, but in the last 3 months. But in reality, only a few ticks off of what is clear resistance. Round numbers, a 102 handle is clear resistance on sixes. And sitting here around 101.27-ish, we're not in bad shape. Would you have been well served to lock that rate as I advised yesterday morning? 100%. If you took the chance, you didn't get killed. And 6.5s, continue to be a little bit wayward here. Definitely at the worst levels in the last 30 days, really around the worst levels in the last 90 days. So as we're sitting here today, purely on a chart basis, and we'll dive in a little bit beyond that, but purely on a chart basis, we're around support on everything except for really sixes. So to me, sixes, which means 6.25 to 6 5/8, or in some cases, maybe 6 3/4. I think we're still full on lock there. I don't know why you wouldn't. Yeah, you've taken a little bit of hit, but I'm not sure that that coupon really should have been where it was last week. That's why we went short. We're still short sixes. And then for some context, we were short some other coupons as well going into this morning, and we're flattening some of those lower coupons. You're getting back to the point where there's some value that can be had purely on a chart basis, 4.5s, 5s, and even 5.5s to a slightly lesser extent. 5.5s are pretty much mid-board. They are in the vicinity of support, which is about par 5-ish. And really, even if you look at a 6-month chart, there was a short window in May where we were at worse levels. So what's the long-term prognosis? Well, before the end of the conflict, I was feeling pretty good about rates, right? Meaning that the data was continuing to get worse. By the way, we dropped 2, 3, 4 inflation data points in the overnight, not necessarily major territories abroad, all of them bond friendly. So these inflation numbers clearly, and if we're trying to make a case that these inflation numbers are directly tied to the price of gas and oil, right? I think that gives you the footing to be long-term optimistic about inflation and therefore interest rates. Now, to whatever extent we get to this point where we could truly get on the same page with Iran, which is a massive wild card. I'm not shocked by yesterday's developments, but I'm surprised, if that makes sense. I feel like we were far enough down the road that cooler and enough intervening parties, right, were involved that maybe are a little bit closer to Iran, both geographically and philosophically, that there was a real meeting of the minds. But, apparently, not the case. Yeah, Frank, I always get a kick out of the average rate because I don't necessarily know where they come up with that. But I believe, and don't hold me to this because it's not really a metric that I care about. It's like some amalgamation of what they think people are selling or whatever. Probably comes from banks who have higher rates anyway. But But I think that the number is when we're above 6.5 there, the faucet kind of turns off, and when we're below 6.5, it turns on. I mean, it's a psychological barrier. Maybe the number's 6 and 6 or 6.25, but I'm pretty sure it's 6.5. But yeah, to me, I think our mindset now really is once we get through 2 o'clock, of course, and that's a bit of a concern as well. In terms of how much are they going to hitch their wagon to the price of gas and oil, and what was really said behind closed doors that might shed some new light on what we think or heard them saying. This is one of those things, and I think I've said it probably every day for the last week, is to me, whenever possible, and it's easier for cap markets people than it is for originators who are cap markets people on a loan by loan basis, or maybe on a smaller pipeline basis, is a lot of what we do is kind of hurry up and wait. And so we made our moves yesterday. What's to talk about today? Well, take some profit, right? But beyond that, so I'm not sitting here kind of wringing my hands saying, we fell off a cliff yesterday. What next? Because I kept insisting that when you look at a chart, when you look at what was in front of us, there's continues to be reason for long-term optimism, but short-term conservatism, not pessimism, but conservatism. And that conservatism served us well yesterday in terms of this move. So, I have to tell you that not only did we lift some of these shorts, but we actually are going to be moving up in coupon a little bit. I'm going to be taking some 5s and moving them to 6s this morning. We've already done the 5 piece. So, in the spirit of not being hypocritical, I think that my advice here today is, I think that you're hard pressed to want to lock in most note rates other than 6.25 to 6.75. I think that maybe a 50-50 case can be made for 5.75 to 6 1/8. But I think that if you didn't lock on Monday, right, 5.25 to whatever 5.75 note rates or below, you've missed it. So you might as well hold on. You might as well, sort of bet that discretion is going to be the better part of valor, and we're going to get back to the table with these guys. Because that's all that matters, and that's all that's going to matter. I think that, in terms of this oil trade, if history has told us anything, kind of the answer is if they don't like it for stocks, they don't like it for bonds, and vice versa. So, I do think that the fact that we're flat-ish in some of these coupons is probably a little bit of a rotation, not so much a risk-off trade, but a little bit of a rotation out of stocks and into bonds. And maybe the best thing that we can kind of hope for here is a slightly more dovish bias at 2 o'clock. And even though there's not a ton of data coming out in the next week until we get to CPI, was it Wednesday, something like that, we can hope that the data continues to weaken and there's some front running of the 17th end of the conflict. So that's what I've got. Remember, bulls and bears make money, pigs get slaughtered. I keep an eye on 2 o'clock and make no mistake, the stakes are much higher than they were 24, 48 hours ago. That's for certain. Thanks for joining live and watching on replay. See you guys tomorrow.